Ticker symbol MNST has risen an impressive 14% in the past year, and today we'll be looking at a company which is as high quality as a company in the stock market can be. And we'll be looking at why TipRanks gave this company an 8 outperform based on moderate buy from analyst consensus, but decreased activity from hedge funds and insiders selling the shares. So we'll be looking at Monster Beverage, an energy drink company. In their annual report, Monster Energy defines their operations as developing, marketing, selling, and distributing energy drink beverages and concentrates for energy drink beverages. They outsource the manufacturing process for the majority of their finished goods energy drink products, and they divide their products and their offerings into 3 different service lines. The first one being the one that we will all probably know and have heard of, being Monster Energy Drinks. These are packaged energy drinks primarily to bottlers and beverage distributors, so they don't sell directly to the public. This is sort of what Coca-Cola does. And this is your normal day-to-day Monster's energy drink in a similar fashion than Red Bull markets its products. Then we have the second type of offerings, which is called strategic brands, and this is basically concentrates and or beverage bases, which they sell to authorized bottling and canning operations so that then they can develop their own drinks. But what is a concentrate or a beverage base? Think about it as powdered milk. You have a substance, and when you mix it with water, it becomes milk. Well, with energy drinks, Monster does the same. They create that substance, which will then create the energy drink, and they sell it to authorized bottling and canning operations so that they can mix it with water or with another liquid and then create the energy drink themselves. And then the third segment is the alcohol brands, which is that Monster Energy, I did not know this, but they actually sell canned beers, hard settlers, and FMBs primarily to beer distributors around the United States. But this company starts to get really interesting when we look at their financial analysis. They have an impressive 19% return on capital employed, which is way above the industry's average. They have a very good interest coverage ratio of 200 times, meaning that this company will not have to worry about debt anytime soon. And then they have a cash conversion of 56%. In this channel, we usually try to target companies which have a cash conversion of 90%. However, I'm not mad at this because Monster is extremely solid in every other fundamental that we have looked at. So we'll say that this is good because it leaves them some room to run and some room for improvement. Their profit margins are great with a 50% and a 25% operating margin, which is above the 15% which we usually look for in companies to invest in. The company's revenues, gross profits, and net income have been increasing for the past 3 to 4 years consistently, as we can see for the chart. And one thing to note is that the gross margin and the net margin have been extremely consistent, which are 2 solid points that we like to see in growing companies. Additionally, this is a company that is not a big fan of leverage, and we can see this in their assets to liabilities and debt to equity ratios, where their current ratio and debt to equity ratios are extremely solid. This company's efficiency ratios are extremely stable. The one we usually like to look at is return on invested capital, which according to this chart provided by Full Ratio is around 60%, which is extremely impressive for a company like Monster Beverage. When moving on to the fundamental analysis, this company, I'm glad to say it, gets a perfect 8 out of 8 ticks. Starting off with the fact that they have extremely low liability risk with an interest coverage ratio of above 200 that we have seen. They have an extremely solid balance sheet, meaning that they can cover all their current liabilities with their short-term assets. And they are extremely consistent with their cash flows, which is something that over here at the Cash Flow Compounder, we're really big fans of. This company is conducting share buybacks on a regular basis, which is great for the investor. And of course, they do have pricing power. Why? Well, because they have an existing moat, which we will be speaking about in a second. But before that, they do have an organic free cash flow growth, which is mainly driven by their organic revenue growth. Now, their existing moat / competitive advantage comes in 2 ways. The first one is their brand. I am aware that a lot of people only drink Red Bull energy drinks. However, there is the other more extreme segment, which only drinks Monster Beverage. This are the loyal customers that this company has, and it's a part of their existing moat / competitive advantage. It's these people that will look at other energy drinks and say, I don't quite like them, I don't quite trust them. I'm going to go with the good old Monster Beverage energy drink, which I know I like and which I know gives me the energy I need. And the second part of this existing moat is their economies of scale. This company has grown their operations at such a big scale that right now they produce everything a lot cheaper than any other company would be able to. So this becomes an entry barrier for other competitors trying to enter the industry and gives Monster a competitive advantage that we always look for in companies when we're looking to invest in them. Now, for the long-term analysis, this company has been growing extremely consistent and in a reliable way for a very long time, so they already know exactly what to do. However, if I was in charge of the company, I would propose 2 ideas. The main one being focus on geographical expansion, and this company is already very global, and the countries which they are not in yet, they do have plans to enter them in the near future, so it's good to see that they are following this step of the strategy. And the second route or avenue for growth would be the new product development. And as we have seen, this company has expanded their offerings into 3 segments because they have been experimenting with a lot of new product development and with research and development. So I'm glad to say that this company is ticking all the right boxes once again when it comes to growth potential. In terms of valuation, I don't think we'll ever find this company trading at its fair value. I think it's safe to say that this company will always be trading at a very hefty premium just because this company is the perfect company. It has ticks in all the fundamental analysis. It knows how to grow its revenues and its bottom line, and that is why a lot of people want to invest in it. And it's the reason why I don't believe that we will find this company close to its fair value anytime soon. As we can see, the PE ratio now is around 38, which is considered average for the past 2-3 years. However, the free cash flow yield does indicate that this company does not look attractive, since the free cash flow yield is 1.3%, a lot lower than the long-term inflation rate of 3%. In terms of risks and possible challenges, this industry is extremely profitable, and as such, it has brought a lot of attention from different competitors that are right now entering the segment. In the past year, I have seen so many different types of energy drinks enter the market, and just to bring an example of maybe the most famous one that has recently entered the space is Prime Energy Drink by KSI and Logan Paul. And when YouTubers start getting into the space in legit businesses, it kind of lets us know that it's a very profitable business and that Monster should pay attention and keep evolving to address the worsening competitive landscape. And the second one I would see is regulatory risks. I have seen various news from different areas around the world where they have started to regulate the consumption of energy drinks. For example, in an area near to where I live, they have actually placed energy drinks where you have to be older than 18 years of age to be able to actually purchase energy drinks and to drink them. In terms of performance and market, I don't believe that these will have a big impact in the company, since this company has been meeting performance objectives for a really long time, and I don't believe that an economic downturn or cyclicality risks actually apply for this company, since it's very, I would say, affordable, one-time only products. Before moving on to the investment conclusion, please remember, I'm not a financial advisor and this is not financial advice, so please do your own due diligence. However, I believe that this company has a very strong competitive advantage. It provides consistent, predictable, and resilient cash flows, which are growing over time. And it does have a high return on capital employed, meaning that it knows how to create value for the investor. Overall, I believe that this is a great company and a great investment, but it trades at a premium, so you have to be ready to pay that premium. So thank you for watching. As always, this has been the Cashflow Compounder. Join the free Patreon for extra content, and there is a link in bio for a free stock.